Hi guys, today we are discussing about where can we invest in the money, how much we can earn the percentage of year on year. Okay, let's see. For example, banks we can get the 4% return on saving accounts, right? And FD we can get the 7.2 to 7.5% per year, and post office we can get the 8 to 8.5%. We have to get the percentage. And if we can invest in the ETFs, we can get 12 to 15% return of the year. And in investing in mutual funds, we can get around approximate 15% returns of the mutual funds. And we can invest in the equity where we can approximately 25 plus percentage, 20 to 25 or around 25 percentage of return we can get the equity market. And if we can doing the option trading, approximately 30 plus percentage we can get the option trading. If your aim is only 15 12 to 15% per year doing the options, it's not right way. So our aim is clearly mentioned. If we want to only 15% of return, we are not doing the trading. We can directly invest in ETFs or mutual funds. Otherwise, if we want to more than 20 plus percent of return, we have to learn the equity. And otherwise, we have to more returns per year on our capital. We can go to the options. But these two are very difficult, but we have to learn this something for this one. We can achieve this percentage, and after this one, we can jump into options. So today we are discussing about the equity. Uh, what type of products is there in equity? So in equity, there we can trade it into two types. One, trading. Another one is investing. Trading means we have to do intraday, one more thing, and second thing is swing trading. Okay, and intraday is within the one day, where we can buy and sell in the within the day. That is called intraday. Swing trading means replace one day to more than anything. That is called the swing trading. In our purpose, we are only swing trading within 1 week or 1 month or 3 months. We can buy and sell in the within the time period of time, where we can expect in the returns of this swing trading 25 to 30% of return per annum. But we are completely avoiding the intraday, so we have to only focus in the swing trading to get the 20 to 30% in between the percentage profit we can get on the our capital, deployed capital, where this is one equity. If we want to more than 30 plus, we have to learn the options. But first of all, we have to go to learn the equity in swing trading. So swing trading is short term period, where short term is less than 3 years, and investing is more than 3 years. It is called investing, where you have to buy and sell the more than 3 years after you have to sell this one. This is the investing. But where swing trading is better to have to buying the lower circuit and selling the upper circuit based on the fundamentals. Okay, and where if you want to become as a successful swing trading trader, you have to learn the three things. Where first one is you have to know the technical analysis. technical analysis, and second one is fundamental analysis. Third one is psychology. So these three things we have to learn while becoming as a good trader. Where you have to learn these three things, you can make it at least 25 to 30% returns on deployed capital. Okay, in technical analysis, they're involved. Okay, technical analysis, they're involved in some indicators and chart reading, and you have to know the stock nature, where it is the resistant and where it is the support levels. Something you have to know this one. And in fundamentals, we have to check the balance sheet and quarter on quarter, year on year growth and PE ratio. Everything we have to check, and you have to select the one more thing, and we have to select the stock based on the technical analysis. We have to buy the stock based on the fundamental analysis. Okay. And we have to deploy capital with the different fundamental criteria, where you have to mention in the for example, you have to 1 lakh rupees, where you can don't buy the total amount in the one stock. There you have to divide into three parts, where first of all you have to divide into capitalization of market capitalization. For example, 1 lakh rupees, you have to 1 lakh rupees, you have to invest in only large cap in 50% of capital you have to input in the large cap, and mid cap you have to input in the 30% of capital in mid cap, and small cap you have to input in the 20%. It means you have to 1 lakh rupees, so they only 5% of capital each stock in large cap company, and 3% of capital in mid cap company, and you have to deploy 2% of capital in the small cap company. And portfolio size should be 40 stocks at a time. Only you have to maintain only 40 stocks. If you got the another stock in it based on the technical and fundamental analysis, you have to only reinvest in the same existing stock, don't buy the another new stock. And whenever you buy and sell, another one is you have to input in the new stocks. Okay. Okay. Thank you.